Assalamu alaikum, dear students. Today we'll start the third part of your chapter plant and natural resources and intangible assets and depreciation associated with that. And in this chapter, we will discuss the depreciation more into detail. But as we all know that in the accounting, as we are following gap principles, which are the gap principles, and we are following international financial reporting standards. So in this case, when we are reporting or when we are calculating depreciation, we have to take into consideration the principles and rules which are being adopted or which are being given by IFRS. So there is another concept that IFRS requires that we should also calculate, or we should also consider the component depreciation of plant asset, because when you have an asset, so it might be possible that there are certain components of a whole asset which have more or less than the original asset's life. So we have to also identify that, and we have to calculate the useful life of that asset and calculate depreciation of that. So it requires that any significant parts of a plant asset that have significantly different estimated useful life should be separately depreciated, because that asset has, it might be possible it has less than life than its the main machinery or main plant or any other asset, fixed asset. So we have to calculate the useful life of those significant components which have more or less than life, or as compared to its original assets, or the whole asset. So we'll see the component depreciation concept in these slides. The concept can be explained with the help of this example. First, we look into the question, that is, a leisure construction builds an office building for Hong Kong dollars 4 million. The building is estimated to have 40 years useful life. However, Hong Kong dollar 3,20,000 of the cost of the building relates to personal property. 6 lakhs relates to land improvement. Because the personal property has a depreciable life of 5 years, and the land improvement have a depreciable life of 10 years. Leisure must use component depreciation. Assume that leisure uses straight line depreciation and no residual value. Component depreciation for the first year of the office building is computed as follows. So as we can see that there is a they have a construction building which is actually, the value is 4 million, and it has 40 years useful life, but the cost related to personal property is 3,20,000, and the land improvement is related to 6 lakhs. So these are different components of that building. So you have to calculate the estimated useful life, because they have different estimated useful life. The personal property has 5-year depreciable life, and the land improvement have 10 years depreciable life. So we have to calculate the depreciation for, because we are using straight line method, it's the simplest method. So with the help of that, we can calculate depreciation of different different assets. So building cost adjusted is that 4 million minus 3,20,000 and 6 lakhs, that is 3.80 million. Building cost depreciation per year is 3.08 million divided by 40, because it has 40 years useful life, and the per year depreciation is 77,000. Personal property depreciation is 3,20,000 divided by 5. That was 320 was the cost of that personal property, and it has an estimated useful life of 5 years. So it will give you per year depreciation 64,000. Land improvement depreciation is 6 lakhs is the cost of that land improvement, and 10 year is the estimated useful life. So we divide with that, and we'll get 60,000 depreciation expense for the period. So the total component depreciation for the first year would be 77,000 plus 64,000 and 60,000, that give us 2,01,000, and this would be the that first year's depreciation cost. You can say expense. And then another aspect of depreciation is that because we have identified different methods of depreciation. So what type of method we should use for income tax purposes, or whether if we are allowed under the rules that we should use different method for tax purposes, income tax purposes, and different method for reporting purposes. So tax law often do not require corporate taxpayer to use the same depreciation method on the tax return that is used in financial statement, as financial statements are statements which are being declared publicly, and these are being used and by the stakeholders. The tax laws does not require us that you should prepare your tax return and you should use according to your financial statement. That means that the method which we have used in financial statements for reporting purposes can be differ from the depreciation method which we used for tax purposes, because we have different types of method. For example, in case of straight line method, we are equal applying the expense in each period, but and the expense of the depreciation is equal in period over its useful life. But in the case of accelerated depreciation method, in the first periods, the depreciation the depreciation depreciation expense is higher as compared to the consecutive periods. So corporation can use straight line methods in their financial statement to maximize net income, because the stakeholders are there, they are using your financial statement, and your shareholders are there who are looking to the performance of the organization. So straight method can be used in for preparation of financial statements, but an accelerated depreciation method can be used on their tax return to minimize tax burden or income tax burden, because as the more depreciation expense will be deducted from your income, so obviously you have to pay less taxes. That's why you can use different methods for tax reporting purposes, or say for declaration of your tax returns. Another aspect or another issue regarding the depreciation method is that it might be possible that you can revise periodic depreciation. For example, if you think that you can use certain asset for 7 years, and you have identified, because most of the things which are being used in accounting methods or for declaring all these things are based on assumption. So it might be possible that you think that you can use a certain asset more than you have estimated its useful life at the very early stages. So in this case, you can revise your periodic depreciation. So depreciation is an estimate in the accounting process. Obviously, I've told you that. So the company makes changes in the current and future periods. So this changes can be done in the current period in which you are recording, and future periods. These statements do not apply to the prior period, because all the records are being maintained and everything should have done. So you need to make changes in the previous periods, but you can make changes in the current period and in the future period. This can be explained by the example. For example, Bob's florist purchased truck for $13,000, which was estimated to have a useful life of 5 years, with its residual value of 1,000 at the beginning of 2014. Assume that Bob's florists decide on January 1st, 2017 to extend the useful life of truck 1 year, a total life of 6 years. He had estimated 5 years, and now he thinks he can use that truck for one more year, and increased its residual value to 2,200. The company has used the straight line method to depreciate the asset. So question are, what is the journal entry to correct the prior year's depreciation and calculate depreciation expense for 2017? Now solving the question, first of all, equipment cost is 13,000, and the residual value is 1,000. So depreciable base is 12,000, and you have divided 5 years, because at that time you have decided that you can use this asset for 5 years. So the annual depreciation would be 2,400. and the total depreciation expense, you can say accumulated depreciation, would be 2400 multiplied by 3, because you are making these changes after 2 year after 3 years. So you might multiply it by 3, so you'll get 7200. Now, first we have to establish the net book value, and net book value is that we deduct the total accumulated depreciation from the cost of your equipment. So, in the balance sheet, property, plant, and equipment is dollars 13,000, because 13,000, and your accumulated depreciation is 7,200. So now the book value of this asset is 5,800. Now, and now, on 2017, after 3 years, you have identified that you can use this asset for more than 5 years, and you have added one more year in it. So first of all, you have identified the net book value, and you deduct your residual value from that, that is 2,200. Now the depreciable base is 3,600, and from 2017, 18, 19, you can, now you have 3 more years that you can use this asset. So you divide 3,600 by 3, you will get 1,200. So this 1,200 is the annual depreciation expense. So for depreciation expense, what you will do is you will use the same entry, that is depreciation expense 1,200 and accumulated depreciation 1,200. So this would be the journal entry for 2017 and the future more of 2 years. So this is how you can treat the restatement, or when you are making changes into the residual value, or the increase in the estimated useful life of your asset. The other method of depreciation is called as MACRS method. And what is MACRS? Actually, MACRS stand for Modified Accelerated Cost Recovery System. In this system, your classes is already identified. There are certain time periods, that, for example, if the asset is in a category in which its useful life is 3 years, so how much a percentage you will take for each period in order to depreciate it, and so on. There are number of useful lives and the percentages. So depreciation rates are found in relevant table provided by IRS. So this table is provided by IRS and Internal Revenue Systems, and they are actually provided you this table, and based on that table you can extract your depreciation expense. And these listed items are those which are subject to personal use, such as computers and automobiles. For example, when you are preparing your tax returns, so these kind of tables will help you, because the majority of time these kind of as the depreciation method can be applied to these personal computer and automobiles. Then another issue that is very important is called as revaluation of plant asset. So what is revaluation of plant asset? And IFRS allows companies to revalue plant asset to fair value at the reporting date. For example, you have an asset and you want to revalue that asset. So if the revaluation is used, it must be applied to all asset in the class of that asset. For example, if you have a certain type of equipment, so you have to apply all that revaluation on that equipment. So assets experiencing rapid price changes must be revalued on annual basis. Obviously, there are certain items which the prices of which can change from time to time. So when you have that kind of asset in which the market value or price of that asset has a rapid price changes, so you can revaluate that asset on annual basis in order to avoid any kind of confusion. So if you look at in this example, that Pernis company applies revaluation to equipment with a book value of with the book carrying value of Hong Kong dollars 1 million, a useful life of 5 years, and no residual value. Pernis makes the following journal entry in year 1, assuming straight line depreciation method. So obviously you have a 1 million asset and you divide it by 5, and because you don't have any residual value, so your depreciation would be 2 lakh per year, and you make a journal entry, depreciation expense debit, that is 2 lakh, and accumulated depreciation credit 2 lakh. At the end of year 1, independent appraisers means that they can analyze a certain asset and to tell you that whether the price is increase or decrease. The appraiser determined that the asset has a fair value of 8 lakh 50,000. The entry to record the revaluation is as follows. That is, accumulated depreciation to 2 lakh, equipment is equal to 1 lakh 50,000, and revaluation surplus that is 50,000. So this would be your the entry for the year number 1, because you have to decrease your asset with 50,000 in order to make the revaluation of that. Okay, now if you valued your asset, so if you look at this, we have first we have credited accumulated depreciation, and then we have debited accumulated depreciation. So it has nullified that, and now the accumulated depreciation has a zero balance. Other and the new basis, and there you have revaluation surplus is of 50,000. Now, in the case of the basis of asset, it is 8 lakh 50,000. This is the new cost of your asset. Now, and depreciation expense is 2 lakh, and this depreciation expense goes to income statement, and 50,000, which is the comprehensive, this is revaluation surplus, goes to comprehensive income. But there is no change in the useful life. Depreciation will be, and assuming that there is no change in the useful life, depreciation expense in the year 2 will be 2 lakh 12,500. That is will be calculated by 8 lakh 50,000 divided by 4. Another asset is that because you are using your asset, and your asset is has to be repaired and maintained and make a certain kind of repairment in that. So we have to make ordinary repairs, and ordinary repairs are the expenditure to maintain the operating efficiency and productive life of the unit. Obviously, if you have a machinery or even you have a property, you have to incur any kind of maintenance expenses on that. So what should we do with this maintenance expenses? So when we talk about maintenance expense, so maintenance expense would be debited, and it is actually called as a revenue expenditure. And what is revenue expenditure? Revenue expenditure is actually expenditure which provide benefit you for less than 1 years. But if you are making any kind of improvement or making more in addition, or more increasing the capacity of your operating assets, so you have to incur cost. So cost incur to increase the operating efficiency, productive capacity of useful life of a plant asset. So in that case, you will the plant asset is affected, and this kind of expenditure would be called as capital expenditure, because these expenditure will benefit you for more than 1 year, because it is actually increasing or improving the operating efficiency of your assets. That's why it is called as capital expenditure. It's just kind of investment in the business, or you can say it's a kind of long-term investment in the business. That's why it is categorized as capital expenditure. So after that, another aspect or another issue regarding your plant asset is the disposal of your assets. As we have discussed that we have to determine the cost of an asset, and after determining the cost of an asset, we have to discuss that once you are using this asset, there might be they are actually depreciate, they lose their efficiency, and you have to recognize that cost. So that is being discussed under the depreciation. After that, we have discussed the reporting requirement, that as we have different depreciation methods, so how we can use different depreciation method if in case of we are reporting in financial statement, or for the stakeholders, or if we are using those for your tax purposes. And then after we have discussed that revaluation of your asset, and the increasing and decreasing the useful life of an asset. So all these issues are associated with that. But whatever the case is, we are actually determining, we have identified that there is an estimated useful life of your asset, and when this useful life ends, or if you can have benefit for more than useful life, but there is a time when there is a time that now you think that you have to change this asset, you have to dispose it of. So what type of treatment and what type of entries you make in your financial statement or in your accounting record would be discussed under this. So because as we say that company dispose of plant asset in three ways. There are basically three ways of getting rid or disposing your asset. First one is your sale. The second one is your retirement, and the third one is your exchange. Sale is when you sell that in a sell that asset to any other party, or you can say retirement mean that you can throw that in your any kind of dumping ground or scrap or discard it, because there is no resale value for that. And in the kind of exchange, in this you can exchange that asset with certain more efficient asset by providing certain amount of money with that and getting the new asset with that. So this is called as exchange. So what we'll do, we'll first record depreciation up to the date of disposal. It might be possible that certain asset will give you a benefit less than their useful life. So in that case, obviously you have to record, you are recording the depreciation for different period. So you have to record depreciation up to the date by eliminating asset by debiting accumulated depreciation and crediting asset account, because you have accumulated depreciation would be debited, and you will credit the account asset account, because you are disposing or you are exchanging or you're selling your asset, you are getting rid of that asset, so you have to credit that asset account. Now, going through different process of disposal of plant asset. The first one is retirement of plant asset. In this case, no cash is received, and as no cash is received, we will decrease accumulated depreciation for the full amount of depreciation taken from the life of the asset, because accumulated depreciation is the amount which actually measures the total depreciation calculated during the period of the usage of that asset. And after that we credit the asset account the original cost of that asset, so and record any difference as gain or loss on disposal. And we'll see that whether we have increase or decrease, or if accumulated depreciation is more or asset account has more. So based upon that we see that whether we have gain or loss on disposal. Now, seeing the example of this retirement of asset, for example, Hobart Enterprises retires its computer printers, which cost 32,000. The cumulated depreciation on these printers is 32,000. Prepare the entry to record this retirement. So obviously, the accumulated depreciation 32,000 and equipment 32,000. There is no gain or loss on the retirement of this asset. But in the case of in the second case, we see that a Sunset company discards delivery equipment that cost 18,000 and has accumulated depreciation of 14,000. So the journal entry would be that accumulated depreciation is 14,000 and the cost of the equipment was 18,000. So in this case, there would be loss on the disposal of plant asset, because the accumulated depreciation was recorded less than its cost. Therefore 4,000 would be loss on the disposal of plant asset. Companies report a loss on disposal in the other income and expenses section of the income statement. Second is sale of plant asset. In the category of disposal of assets, the second thing is that when you sell out your asset, so we compare the book value of that asset with the proceed received from the sale. For example, if you sell a truck and you were using that truck, so the book value is that the total cost of that truck minus the accumulated depreciation, so you will have the book value of that asset, and the proceeds, the amount that that you get when you sold that asset. So by comparing this, you see that whether you have gain on the sale of that plant, that asset, or a loss. So if proceeds exceed the book value, if you proceed, that means the amount you are getting from the buyer of that asset, if it's more than your book value, obviously there would be a gain on disposal. And if the amount, the cash you are getting from the buyer is less than the book value, then this means that you have lost on the disposal of your asset. In the case of gain, for example, we see an example on July 1, 2014, Wright Company sells office furniture for 16,000 cash. The office furniture originally cost 60,000. As of January 1st, 2014, it had accumulated depreciation of 41,000. Depreciation for the first 6 months of for 2014 is 8,000. Prepare the journal entry to record depreciation expense up to the date of sale. So we see that depreciation expense is 8,000 because we are actually recording the depreciation. They are required that we should record the depreciation for the current period. That's why the current period depreciation till the date when you are disposing or we are selling that asset is 8,000. So obviously we'll record the entry depreciation expense debit, that is 8,000, and accumulated depreciation 8,000. Now we will see that now we have to calculate the computation of gain on disposal. So for example, you'll see that cost of office furniture is 60,000, and we'll calculate accumulated depreciation. The accumulated depreciation for the previous period was 41,000, and from the current period, that is 8,000. So we add up those accumulated depreciation. So 49,000 is the accumulated depreciation. So we'll deduct this accumulated depreciation from the total cost of your of your office furniture, that is 60,000 minus 49,000. So we'll get the book value, that is 11,000, and the proceeds you get from the sale of that asset is 16,000. So when you deduct 11,000 from 16,000, so you'll get 5,000 difference, and you are getting 5,000 more. That means that while you are selling this asset, you will gain from that transaction. So how we will record this entry? So we'll record in the entry like this. For example, we are getting cash of 16,000 and accumulated depreciation is 49,000, and the equipment is 60,000, and the gain on disposal of plant asset is 5,000, because this gain on disposal of asset will go to the owner equity account. That's why it is written over here in credit side, and cash is actually the asset you are getting from the proceeds from the sale of that asset, and accumulated depreciation is 49,000. That is actually the accumulated depreciation, the total accumulated depreciation which you have calculated by adding the previous period till January to December 31st from the previous period, and from January 1st to July to June 30th the current period depreciation, that is 8,000. So you'll get 49,000. Equipment 60,000 is the actual cost of that asset, and gain on disposal asset is calculated from the computation above. So now this would be the journal entry while you are disposing your asset on the basis of sale of that asset. Okay. And in the second case, assume that instead of selling the office equipment for 16,000, Wright sells it for 9,000. So in this case, what happened is that we'll see that cost of the office equipment is 60,000, accumulated depreciation is 49,000. These calculators remain same, and obviously the book value also remains same, but the proceed you are getting from the sale, this is 9,000, and from deducting 9,000 from 11,000, you will get 2,000, and this is 2,000 less than your book value. That's why this would be considered as loss from the disposal of plant asset. So your entry would be cash 9,000. This is the cash proceeds while you have sold that asset, that plant asset, that is office furniture, and accumulated depreciation is 49,000 and from till current period, and loss on the disposal of plant asset is 2,000, and the total cost of equipment is 60,000. So this would be the general entry when you have loss on the disposal or loss on the sale of your plant asset.